What's up, guys, and welcome to Wall Street Millennial. The GameStop saga of early 2021 has shown the power of retail investors to band together and make huge profits by sticking it to the short-selling hedge funds. But short squeezes are not a new phenomenon, and hedge funds have long used this strategy for decades to profit off of heavily shorted stocks. One of the most extreme examples of a hedge fund manager orchestrating a short squeeze comes from now disgraced financier Martin Shkreli, who orchestrated a short squeeze of a penny stock in 2015 and profited off of retail investors who were short the stock, the opposite of what happened with the GameStop short squeeze. Martin Shkreli can trace his roots back to very humble beginnings growing up in New York City. His parents were Albanian immigrants and worked as janitors during Shkreli's childhood. He attended Hunter College High School in the Upper East Side of Manhattan. He was a star student, and by the time he was 17, he had earned enough credits to graduate 1 year early. After graduating high school, he secured an internship at Kramer Berkowitz & Company, a hedge fund originally co-founded by CNBC's Mad Money host Jim Cramer. While at Kramer's hedge fund, Shkreli quickly made a name for himself when he recommended a short position in Regeneron Pharmaceuticals, which was testing a new weight loss drug at the time. The senior associates at Kramer Berkowitz took Shkreli's advice and initiated a short position, which profited the hedge fund to the tune of millions of dollars when Regeneron announced that the drug had disappointing results and its share price tanked more than 50% in one day. After interning at Kramer Berkowitz, he attended Baruch College in New York studying business administration, and after graduating, worked as a financial analyst at Intrepid Capital Management and UBS Wealth Management. By 2006, he had developed enough of a reputation as an investment professional to start his own hedge fund, which he named Aliyah Capital Management. But within a year of founding Aliyah, Shkreli's unsuccessful trades put the fund on the verge of bankruptcy. In 2007, Shkreli wanted to bet on a broad market decline, so he entered into an unhedged put option transaction with their broker Lehman Brothers being the counterparty. Unfortunately, this decline never materialized, and his fund lost millions of dollars on the position and didn't have the cash on hand to pay off their liabilities to Lehman. In 2007, Lehman sued Aliyah to recoup the $2.3 million they were owed, and the judge ruled in Lehman's favor. Fortunately for Shkreli, before the money could be collected, Lehman Brothers went bankrupt and he never ended up paying them back. Despite the disaster of his first hedge fund, Shkreli started a new hedge fund called MSMB Capital Management in 2009. He raised money for this new hedge fund by misleading prospective investors about his returns. In 2010, he said that his fund had returned 35% since its inception in the prior year, but really it had actually lost 18%. He also said that the hedge fund managed $35 million, when in reality it had less than $1,000 in assets. Through his deception, he was able to convince 8 high net worth individuals to give him about $3 million to manage. The performance of this new hedge fund was equally as disastrous as the previous one. In 2011, he lied to his broker Merrill Lynch about how much collateral he had so that they would allow him to make a large short position in a pharmaceutical stock. Shortly after he shorted it, the stock price went up and the broker forced him to cover at a $7 million loss. His fund didn't have the $7 million and became insolvent. But before Merrill Lynch was able to collect all the money MSMB Capital owed them, Shkreli transferred some of the fund's money to 2 new companies that he created, MSMB Healthcare and Retrofin. He gave his new investors a stake in the new companies to placate them now that his hedge fund was bankrupt. Retrofin was founded as a pharmaceutical company that aimed to develop new treatments for rare diseases with Shkreli as CEO. He listed Retrofin on the Nasdaq to raise money to fund their new drug developments. In 2014, the company's board removed Shkreli as CEO, alleging that he misappropriated company funds for his own personal use, including paying out over $2.7 million of cash from Retrofin's balance sheet and issuing more than 590,000 shares of stock to investors who lost their money in his MSMB hedge fund. He was essentially running a Ponzi scheme, raising money from investors in his new company Retrofin to pay off the investors in his previous scam, MSMB Capital. After he was forced out of Retrofin, he somehow still had enough credibility on Wall Street to start a new company, Turing Pharmaceuticals, where he controversially bought the rights to antiparasitic drug Daraprim and raised its price by a factor of 56, from $13.50 a pill to $750 overnight. Here he is defending the price hike on CNBC.
Your corporate existence.
Martin, you had mentioned that you're a small company, and you're going to use the price increase, the difference, to do R&D to find a better cure for toxoplasmosis. What kind of R&D staff do you have? What amount of money do you plan on devoting to research and development?
Sure. So we have about 25 people in R&D, and we have open positions for another 25. We do medicinal chemistry, in vivo and vitro pharmacology. I help the team out quite a bit, so I'm really excited to develop new drugs for toxoplasmosis. We're going to contribute the majority of our revenue to doing that. So in essence, we're taking the revenue from Daraprim and trying to come up with a better, safer, more effective version of it.
Okay. And you were a hedge fund manager before.
Yes.
You probably could have guessed, as Meg had mentioned, that this is going to cause a stir. And we actually saw the IBB, the Biotech Index ETF, go down about 5% on Hillary's tweet. Did you anticipate that that would happen? Are you in any way invested in biotech through a short, either personally or through another fund?
I have a small portfolio, but I don't really watch the stock market on a day-to-day basis.
So does that mean that do you have any position in biotech stocks? Are you short any? Are you short any of them?
Yeah, I'm short a few biotech stocks, but I'm also long a few biotech stocks, and I don't have a specific net short interest in biotech or anything.
Martin, I got to ask you, doctors have come out saying that you guys need to revise your pricing strategy because patients can't get access to these drugs. This HIV doc I just spoke with said they're trying to hoard it in order to provide it. Do you feel badly about what's happening?
No, in fact, we're increasing access to patients, Mag. I think that we're dramatically increasing the access to Daraprim, lowering co-pays, giving more drug away for free. Half of the drug we give away is for $1, so I'm not sure what you're talking about.
Martin, when you bought the company, this was a $1 pill before Core Labs bought it. Then it went to $13.50. Now you bought it. Now it goes to over $700. Would you have bought, when you bought this company, did you buy it because you knew that you could raise the price?
We definitely planned on raising the price, that's for sure. We paid a very, very large amount to buy an unprofitable medicine. We can't continue to lose money on the drug at that price. So we took it to a price where we can make a comfortable profit, but not any kind of ridiculous profit. They're much larger.
But I assume you are a free markets gentleman, are you not?
Sure.
Okay, so
means.
Why do you think the drug was priced at $13.50 before? Somebody thought that was the right price for this drug.
Markets aren't that rational.
The market said $13.50 worked.
Yeah, if you look at drugs like Sovaldi, for instance, Daraprim is less expensive than Sovaldi, despite the fact that it treats a disease that's far more severe and far less common. So if you think about free markets and fair price, it's pretty clear that Daraprim was not priced appropriately.
While Shkreli's price gouging of the Daraprim drug was his most controversial and high-profile endeavor, as he alluded to in the interview, at the same time he was acting as CEO of Turing Pharmaceuticals, he was also trading stocks on his personal account. And while most of his ventures up to this point have been scams, he was able to amass a sizable personal fortune by paying himself and misappropriating his investors' funds into his own pockets. In 2015, Shkreli found out about a pharmaceutical penny stock called Calaboise. Calaboise was near insolvency after its drug trial failed, and it had no way of paying off the $6 million of debt on its balance sheet. Many investors, including retail investors, shorted shares of the company as they saw no future for the company other than bankruptcy. Shkreli saw the high short interest and led a group of investors to acquire a majority stake in the company to buy shares on the open market. Because the market cap was so low at the time, this only took a few $1 million. The buying pressure from Shkreli and his associates pushed share prices higher and induced a short squeeze as brokers forced the short sellers to cover their positions. And because the stock was so small, most of the short sellers weren't hedge funds, but instead were individual investors, including one E-Trade user, Joe Campbell, who shorted $37,000 worth of the stock, which turned into a negative $106,000 balance as shares skyrocketed overnight. After more than a decade of scamming investors, Martin Shkreli was finally held accountable for his crimes in December of 2015, when he was charged with running a Ponzi-like scheme and defrauding investors. Notably, the charges against him did not include anything related to the Calaboise short squeeze. Despite the overwhelming evidence against him, he pled not guilty and was defiant, calling the charges a witch hunt.
We're, I think, delighted in many ways with this verdict. Count 7 was the government's attempt to theorize that robbed Peter to pay Paul, and the jury has spoken conclusively that Richtofen was not defrauded in this case. My investors made 3 to 5 times their money without any aid of any settlement agreement. Some made 10 times or more than that of their original investment after they did receive settlements. I'm delighted the jury did their job. They saw the facts as they were, and most importantly, I'd like to thank Ben, greatest lawyer on the planet, who took a risk on me and paid off. Thank you very much, Ben, and Mark, whose great success as a lawyer is extremely noteworthy and continued with this case. And of course, Penny, Jacob, and Andrea, who worked around the clock to get these 5 not guilty verdicts. As to the 3, as Mark said, we have some work to do. I think that the jury's found, and it's in the record clearly that there were no losses at all with respect to counts 3 and 6, which gratifies me personally. This was a witch hunt of epic proportions, and maybe they found 1 or 2 broomsticks, but at the end of the day, we've been acquitted of the most important charges of this case, and I'm delighted to report that.
But in 2018, when the trial was finally held, the jurors saw through his deception and sentenced him to 7 years in federal prison. As the sentence was read out, reality finally crushed his arrogant attitude, and he was seen crying in the courtroom. Alright guys, that wraps it up for this video. What do you think about Martin Shkreli? Was 7 years an appropriate punishment for his crimes? Let us know in the comments section below. As always, thank you all so much for watching, and we'll see you in the next video. Wall Street Millennial, signing out.